Welcome back, everyone. This is a brief update on the news from the oil market. During the previous days, the weekly counts of both EIA and API crude oil inventory reports indicated a drop of stocks, despite production growing to all-time high levels. The fact came as a surprise to most oil followers, as we have seen stocks building for 5 consecutive weeks, while the drop of 8.6 million barrels in the week to February 22nd can be considered as large, due to the expectations of a positive reading of 2.8 million barrels, the EIA stated. Crude oil prices run up, extending gains after the data was released and traded at $57.28 per barrel. According to Reuters, oil exports from Saudi Arabia to China are forecasted to increase by approximately 1.5 million barrels per day in the first quarter of 2019. The report found that the forecast was based on growing demand, and more specifically, from new and independent Chinese refiners. It's been publicized for quite a while now that Saudi Arabia, with oil giant Aramco, is making big moves in the international scene in order to achieve expansion and capture a large part of the market share. Aramco is moving aggressively towards international markets with its new marketing strategy and was able to close long-term supply deals and refinery construction plans in many countries. On another front, various reports indicate Libya's Sharara oilfield is close to restarting its production activities with an estimate of 80,000 barrels per day. Libya's official government has agreed with state oil firm NOC to reopen Libya's southern desert, as it has been closed since December 2018. The oil production in Libya is not the biggest from a volume perspective, but could help boost oil supply levels if it's confirmed they will start producing again. Criticism towards the US shale oil producers was made by BP Chief Executive Bob Dudley, saying the US is the only country that completely responds to market signals like a market without a brain. In our opinion, the US market has the opportunity to uplift its shale oil producing activities as their extraction methods are more advanced technologically. On other news, Saudi Arabian officials have responded to US President Trump, who complained this week that oil prices are too high, that they are taking it easy. The Saudis have stated many times in the past that they aim to balance the oil market supply and demand. However, how can they take it easy as the US keeps pumping more oil, creating an abundance in supply? Various reports indicate that the Saudis are keeping it easy for the time being, but have in mind to enforce more production cuts in their upcoming meeting in April 2019. Please note, oil prices have surged by about 20% since the start of the year, and a lot of analysts argue that this is due to actions taken by the OPEC group and other producers such as Russia cutting output. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+. This is Angelos Zitis from IronFX wishing you solid trading.